Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
Remember this number, 433,323,000. That's how many shares of common stock. It represents 9.9% of the fully diluted common shares in Intel that the government will receive because of $8.87 billion in funding under the Chips and Sciences Act. This, according to people familiar with the terms of the deal. What we're talking about is the U.S. taking a close to 10% stake in Intel, clinching an unorthodox deal. We've got with us Joe Doe. He covers economic statecraft for Bloomberg News. He joins us here in the Bloomberg Interactive Brokers studio. So we knew about the possibility of a deal for more than the last week, thanks to the reporting by you and the entire team at Bloomberg News, who's been all over this story. What are the details that we've just now learned? Because it's official.
Yeah, it's official. I mean, people familiar with the terms have said it's this nearly 10% stake. It's a 9.9% stake at, what is it, $8.9 billion. So what that tells us is they're doing what Howard Lutnick earlier this week confirmed from our reporting last week, and the president today said, hey, it's a 10% stake. Mm-hmm. But like we point out in our story, one of the things that analysts and experts around Intel say is like an equity stake on its own like doesn't do a lot to move the needle for the company. You need customers, you need partners. Yeah. I think that's really where the interesting part of the story is to me.
And I'm curious, how influential is this? Of course, we know that this is a non-voting stake that they're going to be having. How big of an influence would this be toward the company?
So I think, this is kind of just talking to people around this space, right? Is like, well, suddenly if you're a company with the government having a stake in your company, the questions you ask if you don't have them on as a board member is like, one person said, you got to start getting used to having Elizabeth Warren calling you every day. And I think that kind of encapsulates like where you now have the United States federal government as a partner, as an equity partner, as a stakeholder. That means Donald Trump can at any point just speak off the cuff about your company, whether good or bad. And you're just going to have you're going to be a target. There's going to be some return that you want, right? And I think that is both maybe a problem, but also one of the things we point out in our story, like it could be good that that Intel has the thumb of the president kind of over them to try and move ahead. Maybe.
Who knows? We have this is a new era for capitalism
it's totally
in the U.S., as you've spoken about. Joe, I wanted to ask about the structure of this and the relationship with Chips and Sciences Act money. The president has been outspoken regarding the disdain that he has for the Chips and Sciences Act, which of course was approved by Congress and signed into law by the president. By President Biden. Yeah, the last president. Is the remaining Chips and Sciences Fund Act money that Intel was supposed to be awarded, is that what represents the stake?
Yeah. I think most of that stake, right?
No new money is coming from the U.S. government to Intel?
As we understand it. I mean, the details were that it's the remaining money that they had been promised for the CHIPS Act, and it was in the form of grants, is now going to be converted to an equity stake. And I think you're asking the right question, which is, well, you still need capital, right? Like they have this massive plant that they have in Ohio that they have been building, and a significant amount of that money that was in grants was being put towards the building of this facility. And as one person said to me earlier this week was, okay, great. So you take an equity stake. Where's the other money going to come from? If you do want this company growing, that means they're going to have to be building, and they're going to need the capital to do that. So I don't know. Like we can't really speculate, right? Like what we know now is the equity stake is happening. And beyond that, there's really not a lot of detail. What does the president want? What is
so he wants skin in the? It sounds like he wants skin in the game.
Yeah, and what else? I mean, the point is, you see them as a bit of a national champion. You see them as central to national security for the United States of America, central to economic prosperity, all these things, right? But like the point of the game, once you get there, is like catapulting this company ahead. It's lagged behind competitors for years now. I mean, Matt Boyle, who you're going to hear later, he and I were talking about this earlier. Like, when's the last time the average person was actually talking about Intel? This is a company that has fallen behind competitors, and it does need partners to help lift it up.
So while Intel's not the only U.S.-based chip manufacturer, it is the only U.S. headquartered company with a leading edge in terms of manufacturing. So
yeah,
how does this kind of all come into play? How is this integral for the administration's mission to keep manufacturing here in the United States?
Yeah, I think, listen, Donald Trump is a big fan of the industrial economy, right? Manufacturing has been at the top of his list since the first term. I mean, all he did was talking about steel and steel tariffs during his campaign in 2016. I think he believes, on the one hand, yes, let's boost the domestic capacity for production of chips here. But he also understands, this chip manufacturer in particular is important for the AI battle that's going on. You do need Intel with NVIDIA and AMD. They can't just disappear. I mean, you can talk to anybody in this space and say, is Intel too big to fail? And every single one of them says yes.
Joe Doe, you've been so generous with your time. The reporting from you and the team has been fantastic. Have a great weekend.
You too.
Maybe we will not see you in the next 30 minutes. We never know. Joe Doe, he's a Bloomberg News economic statecraft reporter. Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Stocks surging after the Fed chair struck a more dovish tone than many expected during his highly anticipated final speech at Jackson Hole. The Fed chair covered a lot in there, during which treasuries rallied and the dollar tumbled too. He addressed the dual mandate, the effect of tariffs, and emphasized the committee's, quote, data-driven approach.
While the labor market appears to be in balance, it is a curious kind of balance. This unusual situation suggests that downside risks to employment are rising. At the same time, GDP growth has slowed notably. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months. With high uncertainty, a reasonable base case is that the effects will be relatively short-lived. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic. The baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach.
That Fed Chair Jay Powell in Jackson Hole earlier today. I want to bring in Michael McKee, international economics and policy correspondent for Bloomberg TV and radio. He's on the ground in Jackson, Wyoming. Also with us here in the Bloomberg Interactive Broker studio is Stuart Paul. He's U.S. and Canada economist for Bloomberg Economics. Mike, I want to start with you. As I mentioned, he covered a lot of ground, and certainly we're seeing traders happy with what they heard. But beyond the idea of a potential rate cut in September, apart from that, what was the biggest news, your biggest takeaway from this final Jackson Hole speech?
I think anybody on Wall Street, it's hard to get beyond that. The next thing he did was outline the new framework, which may be reassuring to people because they basically abandoned the idea of making the labor market the primary determinant of what their monetary policy is going to be. That was the old framework. They hadn't actually followed that since we saw the pandemic disrupt everybody's economy, including the inflation levels. So that was the second biggest thing for him there. But the surprise was certainly that he was as dovish as he was and opened the door to a rate cut, because most people coming into this, including the Fed folks that I talked to, thought he would try to keep his options open because we don't know what's going to happen with the unemployment report coming up on September 15th and the CPI report on September 11th.
Did he give you any insight in that speech as to the evidence that he cited as to why he does have that door open for a 25 basis point rate cut in September?
Well, basically, he addressed the tension between the two sides of the Fed's mandate. On the employment side, what he was saying is that because we are concerned about whether companies are going to have to absorb a lot of tariff hit, and because companies are nervous about the overall economy, we could see unemployment start to rise. He called it a kind of unusual situation where you have a lot of companies have stopped hiring, but you also have companies not firing people, and they might be poised to fire people. That could happen fairly rapidly, and the Fed wants to get ahead of that. At the same time, they have to worry about inflation. But because the president has stretched out the application of tariffs, because they're different for so many different countries, because more are yet to come, it is likely that the tariffs will hit individual sectors at different time periods, and they will be sort of rolling across the economy, but each one will be a one-time price increase, as Chris Waller, the Fed governor, suggested would happen. And so they will have more time to react to inflation than they might to the jobs numbers. And that's why they're now looking at the labor market as perhaps the trigger to this rate cut in September.
I also wanted to talk to Stuart, bring you into this conversation here. Of course, we now know that a lot of traders are pricing in the September rate cut next month. And of course, it's a conversation about whether it's going to be a hawkish or dovish cut here. But how are you thinking about the economy during this time period and how aggressive potentially the rate cut cadence could be moving forward?
I think that the rate cut cadence is going to be actually relatively slow. I think that we're going to see something more along the lines of a hawkish cut if we get one in September. There's still a lot of data that we need to see before then. As Mike was saying, a lot of the members of the FOMC that he's been talking to in Jackson Hole, people like Susan Collins from Boston, people like Austin Goolsbee, people like Beth Hammock from Cleveland, they've all been actually a little bit more hawkish regarding the current economic landscape than we heard from Chairman Powell today. Now, Chairman Powell did acknowledge that the labor market is becoming a bit more of a concern than the inflation outlook, but he also pointed to the point that growth has merely slowed. It's not as though there's a certain amount of urgency right now that we need to see. And so I don't expect that we're going to get something like sequential cuts. I think we'll probably get a 25 basis point cut, if anything, in September, and maybe that's it for the year.
Stuart, which part of the dual mandate do you think the Fed should be more concerned about right now?
I think the labor market is by far the most
important. Do you think they
important.
are more concerned about that?
I think that right now they are favoring the inflation side of the mandate. I would be a little bit more concerned about the labor market because, again, this Chairman Powell did note the pace of hiring over the last 3 months has slowed to an average pace of about 35,000 jobs added. That's down from about 168,000 jobs added last year. As Mike pointed to, if we start seeing even just incremental layoffs, the pace at which unemployment will accelerate is going to be pretty rapid.
So, Stuart, of course, we know that Powell tends to really avoid anything that would represent him leaning toward commenting on fiscal policy. He only focuses particularly on the economic impact. I want to know here, how are we thinking about tariffs, though, in this situation and how it's affected the economy and how the Fed will really have to wiggle through and figure out how to address these concerns?
Well, because we got the Canada news earlier today, and you're also you're also Canadian economist, too.
Yes, very timely.
Yes. So from the U.S. perspective, we'll start there because we are thinking most about the Fed on this Friday. An average effective tariff rate of about 17% adds about 1.5 percentage points to core inflation over the period, over about an 18 to 24 month period. And it also creates drag on growth, real drag of about 2 percentage points. And so from the U.S. perspective, it just amplifies the risk to both sides of the Fed's dual mandate. With unemployment low, that's allowed the Fed to remain on hold, favoring inflation for now. But again, labor market has the potential to cool. Canada, as we saw, has been suffering from the consequences of the trade war. That's really been amplified in the second quarter, and we're going to see just how much of a toll the trade war has taken on Canada next Friday when we get their Q2 GDP numbers, I expect to see a modest contraction. Now, Prime Minister Mark Carney announced that he'd be rolling back some of the retaliatory tariffs that Canada has imposed in response to U.S. Tariffs on Canadian goods. The reality is, though, that the effective tariff rate on Canada is just about 7%. Canada has avoided most of the muscular tariffs imposed by President Trump. And unfortunately for Prime Minister Carney, the fact that he's willing to reduce some of his retaliatory tariffs isn't going to do much of the trick in the short run.
Okay.
Negotiations are going to continue well into 2026 with the USMCA renegotiation.
All right, gonna have to leave it there, guys. Thank you so much to both of you for joining us. Stuart Paul, U.S. and Canada economist for Bloomberg Economics, here in the studio. Michael McKee on the ground in Jackson, Wyoming. He's international economics and policy correspondent for Bloomberg TV and radio. Stay with us. More from Bloomberg Businessweek Daily coming up after this.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
This, of course, is a day where we were really focused on the Federal Reserve at Jackson Hole in Wyoming today. We had the Fed chair, Jerome Powell, speaking today. And of course, it really did elevate markets in terms of how he essentially suggested that, maybe there could be a future in which the rest of this year we could see traders were really pricing in a rate cut for September here. But we have the perfect person to break all of this down, and that's Emily Green, head of private wealth management at Ellevest. And we really want to chat with you a bit about what your view is on the market right now. How are you receiving this commentary from Jerome Powell?
Yeah, no, I think it's really interesting because you saw earlier this week, the market had been thinking that we were going to have a rate cut in September. And then, we saw a rougher market week with inflation data and people starting to think that maybe it was becoming more unlikely that that was going to happen. And Powell's comments really indicated that likely moving to a rate cut in September. I think it's really interesting thinking about where the job market is and inflation and taking that into account, that the Fed certainly doesn't have an easy path ahead of them in thinking about this. And, looking at what that means in terms of the economy, I think we're really lucky that we still have room to lower rates at this point when we think about where, when we need stimulus into the economy, that the Fed actually has that tool. That we had raised rates a couple of years ago to get to this point. Even though we're a point lower than we were a year ago, the Fed still has a lot of room to do that work.
Yeah, and I think one thing that we make sure isn't lost in the conversation today is about why the Fed could or would potentially lower rates. And, that is not necessarily the reason that the president wants rates to be lower, the reason why he says rates should be lower. Can you talk a little bit about that tension with the dual mandate and what the Fed chair is seeing when it comes to some cracks starting to form?
Yeah, I think it's really interesting. You're looking at a weaker job market out there. I think we've started to see that. I personally started to see it with working with our clients and such, but we're starting to see a weaker job market. At the same time, you are starting to see some pressure in inflation. We're starting to see consumer data pricing in slightly higher prices. You're starting to see, you're looking at annual inflation rate in July at 2.7%. You have to manage these two things across this. And so you really start to worry about those unemployment numbers. And you look at there's a slowing in both supply and demand for workers. So what does that mean for our labor market going forward? And the Fed really needs to think about that and really managing that. And so I don't think that they'll have more aggressive rate hikes or rate cuts that the president wants within here. I also think it's really important. Like one of the things that Powell did talk about is the Fed's independence. And one thing that I don't think that the administration totally appreciates within here is that the Fed's independence is so important to where rates are within here. And as soon as it seems like we're losing that independence, you're going to have, it doesn't matter if the Fed starts lowering rates. If the market is going to say the Fed is no longer independent, you are going to see rates actually go up within there. And so you forget, like, there's all these different market things because that creates risk within the economy. And so as much as, the administration is pushing Powell and to cut rates, I think it's right for him to start to think about where the labor market is and starting to do a cut in September. But I do think that, we really need to be making sure that we're looking at this a completely independent way. We're continuing to see Trump put pressure on the Fed even this week within here. And so I think that him kind of calming the markets through that was an important part of the commentary that has not been talked about as much today.
Right. I mean, that's definitely been something that has been in focus in addition to all that's going on at Jackson Hole, as you mentioned, the pressure that's being placed on Jay Powell. But additionally, Lisa Cook has, of course, been under a microscope, to say the least, as of late. But I want to know, there's a lot of things going on right now, lots of uncertainty in certain places in the market. You're focused on private wealth management. How are you advising your clients during this time period? How should they be investing both over the near term and long term?
Yeah, I think it depends on the client within here. At Ellevest, we have clients of all different ages and, from high net worth to ultra high net worth individuals. And I think for those investors who are long-term investors, it's really thinking about that asset allocation, making sure that you have the right portfolio put together, but being smart about what's going on right now. I think the people who are going to have the toughest time are people who just retired, because one of the things that we have to remember is that if inflation starts to tick up, fixed income, the bond market is actually becomes more correlated in those times. It becomes less of that like the on the bottom that's really helping people out here. And so it's not going to dampen that volatility as much. It starts to be more correlated to the stock market as inflation goes up. We've seen that in all the downturns since 2020 within here. And so that is, you have all these people who maybe are out of work and need income from their portfolio, maybe have taken a lesser paying job, or maybe retired over the past couple of years and are really thinking about, I need my portfolio to grow. I need the income off my portfolio. And that's where I think it's more difficult to think about, is like people who need things in the near term. And I do think that there's a lot of opportunity within the market today. I continue to see there's what happens when fixed income is not the only thing that can diversify from stocks. And you really have to look at the alternative investment space. And, you look at what's good during times like this, and you look at, real assets within here. And so there's a lot of things to think about, but I think making sure that someone has a well-diversified portfolio during times like this. And really just thinking about, we still have an enormous concentration. Like if you buy an ETF today, you still have an enormous concentration in the Mag 7. And so what does that mean for you? What does that mean for your risk? And depending on the person, like, does that make sense for you over the long term, that 30+% of the index is in 7 stocks within there? And so really making sure that you have that diversification across your portfolio, and you're thinking about, if you need income in the short term, how are you going to make that, and how are you going to dampen that volatility, knowing that fixed income may not be the best dampener of that volatility over the next year.
Hey, we got to have you back on the program because we didn't really get to talk about the great wealth transfer, which I know you watch very closely, multifamily housing and more, but really do appreciate you taking the time, Emily, and joining us. That's Emily Green, head of private wealth management over at Ellevest. Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
I want to go to space now because there's some news this week in the world of space. Boeing's X-37 space plane, which the company describes as a, quote, orbital test vehicle, last night blasted off on a SpaceX Falcon 9 from Kennedy Space Center in Florida. It's the 8th mission for the reusable spacecraft. Jeshpal Bhatia is back with us. He watches all of those launches closely. He's CEO over at Axiom Space. It provides mission services, and it's also working to build the next space station. Tejpal, welcome back. I want to start with the upcoming orbital data center launch. This is something, do we know when do we have a date for that yet?
Yeah, well, first, thank you for having me back. And second, I like that you said you want to go to space.
Oh,
you started to say, I was like, I'll go with you in a second if you want.
Would you go?
I know a guy who sends people. Yeah, I would go in a heartbeat.
Why haven't you been?
For the last 4 years at Axiom and the last 4 months as CEO, it's been my dream since I was like 3 years old. When I say dream, it's all I've been thinking about. And as we as a company have now sent multiple countries, multiple missions, 16 astronauts to the ISS, and I figured out how to go, I realized that my purpose is much more about getting as many people up as we possibly can, because I am certain that we will have many opportunities to go.
So do you think you will in your lifetime?
Yeah, for sure.
And how many years?
Sure. Possibly this decade, definitely next decade.
Okay.
Yeah.
Okay. Before that, though, the orbital data center.
Yes.
Can you explain what exactly this is? Because we talk a lot about data centers here, but we never talk about them in the orbital context.
Yes,
in
layman's terms.
Yes, exactly. So it's interesting. Like I'm smiling now because I'm just thinking about going to space. While my first passion has always been space, actually the one thing I'm probably another expert on in the world is cloud. Before getting into space, I had my own startups. I worked at ESPN in the early days of HD streaming, and I was at Google on the startup side while we were ramping up Google Cloud. And as we know on the terrestrial side, cloud is a phenomenal business, right? It's a phenomenal business model. The market's growing faster than the largest cloud providers combined. We believe space is going to be exactly the same thing from a business model standpoint. But then the question is, why send a data center up there when we have so many down here? And the first thing I would say is, think of it this way. When we're talking about orbital data centers, and we've been running cloud computing on the International Space Station, Axiom Space, along with Amazon, since our AX-1
the snow
mission.
cone edge computer.
Exactly.
Yeah.
And on every single mission, we've done significant compute on it. And between missions, we've done workloads from the ground. On the AX-4 mission, we sent up an Aura ring that was checking the biometrics of the astronauts. I'm going to go, oh, you give me the finger? Or?
No, I'm wearing one right now.
Yeah, I love it. I'm obsessed.
Looking at the ring.
Yeah, I got it the first day I took the CEO role. And I got it to track my stress.
So it was like bestowed upon you.
Sort of.
Okay.
I think the metric that I care the most about is sleep. That's the one I track in terms of my performance. But we were measuring all these things on the AX-4 mission and feeding it to the snow cone on ISS. So actually using edge compute, cloud compute in space versus on the ground. But the point here is, when you think about orbital data centers in the ISS, don't think of them as so far away. It's literally 250 miles away.
So how much power does it take?
A lot. So
Okay, what's a lot?
It's the same problem that we're going to have here on Earth, which is also interesting to me now with AI, that the limiting factor is power. And you're seeing this growth for nuclear startups, and you're seeing this growth for AI data centers needing nuclear power. When we're talking about space, that's going to be the limiting factor.
So is that the answer? Nuclear, small modular reactors? How do you power
I would
these
think
things?
so. It's a little.
Is there any other way to do it? Could you do it with solar?
You could, but at some point, those are going to get so big to give the power we need. And a lot of people will say, and I'm not speaking as a scientist here, because I said the wrong thing first also, which is, well, you don't have to worry about cooling there. You do. You have to, convection is something that is, you have to, for all the power you create, you have to dissipate it as well. So that just surface area is going to get so large. So I think ultimately that will be the same solution. But the point about the orbital data centers is, for many people on the Earth, not like us here in New York or in Virginia or DC or other cities, that will be the closest data center to someone at any given time.
Wow.
So how concentrated is this space? How many players are here alongside you all?
So we, as Axiom, we're building the replacement to the International Space Station, and our modules that will connect to the ISS due to our exclusive contract to connect to commercial module, those are cloud first. To keep human life going, you need cloud computing services. Now, we could fractionalize those and offer those to other companies. We're actually sending up separate infrastructure later this year. You had asked when? Q4, in the next couple of months. But the point of this network, ours we call a heterogeneous network. A module could be a data center, a satellite could be a data center. But when you look at other constellations, those are homogeneous networks, all the same. But the point is they're connected by data. Some are all one network, some are federated, but this is where we're going. In terms of where the space is, I think people are finally starting to wake up. Just even the fact that you're talking about orbital data center, ODCs, as we call them, just 6 months ago, people wouldn't know what you were talking about. The words are very obvious, a data center that's orbiting the Earth, but still it's just kind of like, why? But I think we've gone well past that, and now it's how and when.
You said that the potential use case here is that some people who live around the world, this might be the closest data center to them at any given moment, one that does orbit. But there are latency issues with that and speed of connectivity issues that I would imagine are better handled on the ground by wireline connections.
So I love that question. I would have had the same thing. When my team came to me and they gave me all the reasons why we should do this. And again, I'm a cloud nut and a space nut. I was looking for solutions for that.
Like this is the literal cloud.
Yeah. This is literally literal cloud above the clouds, right? Like not data centers around here. One of the most powerful use cases of orbital data centers is low latency AI. So it actually solves the latency problem for many distance issues like cars driving around in remote areas, navigation for maritime needs. Now, there's many cases of that for Earth, but now when you just go a little bit above the atmosphere and look at space, edge computing on labs in space, edge computing for other satellites. Where it gets really crazy and awesome for me is what happens when latency actually becomes a problem because of distance. So we have laser and optical communication. I'm not worried about speed and bandwidth. I am worried about power. But what happens when your distance is so long that actually synchronizing the internet is a problem? Or when two planets are on opposite sides of the sun? You don't even have line of sight. How are we going to synchronize Twitter? How are we going to synchronize YouTube? How are we going to FaceTime? I think those are just such cool problems for students around the world to solve.
So super quickly, the ISS is set to retire by the end of 2030. How confident are you in that timeline? And what risks does Axiom face if NASA extends its life longer than expected?
Yeah, I'm pretty confident it will come down. It's already been extended, right? Originally, I think the expiration date was 2024, and Congress has stretched it out. It's a piece of equipment, right? It was designed with a certain lifespan. Some parts are newer than others, but the whole thing was designed to come down as one. So I think it's a given. It will come down. Like when, we'll see, but I think by 2030. I feel very confident about it. I don't think there's any risk if the government extends it. I think it's great if they extend it. But independent of that, if there isn't a commercial solution, if Axiom Space is not up and running by the time it comes down, the only other space station in operation is a Chinese station, right? So that is a very real, I'll say, competitive threat, strategic competitive threat. And from a diplomatic standpoint, the leadership that the U.S. has provided, and now the leadership that companies like Axiom Space, the diplomatic interest we can push for the U.S. around the world with all the different countries, we'll basically just be ceding that to the Chinese. And I don't think that's what we want.
Tej Bhatia, good to see you. Thanks for
having me back.
100 days as CEO of Axiom Space.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.